Hello from Freedomtax Accounting. We are an accounting firm here in Florida where we have been providing quality tax and accounting services now for almost 20 years. Today is August 14th, and we wanted to talk about one of the most common questions we get when dealing with the PPP loan. A lot of business owners are asking us, do I have to pay taxes on my PPP loan funds? Okay, so we wanted to make a video to discuss this topic. And remember that we are recording this video on August 14th. The date of the recording is very important because if you have been following the PPP loan saga, you may know that these loans have been constantly changing. So whatever we discuss today may change as soon as this afternoon. So that's the importance of subscribing to our channel, where we are doing our best to provide you with the most current, accurate, and correct information regarding the PPP loan. Okay? Now, before we start, remember that this video is intended for educational purposes and should not be taken as legal or tax advice. You should consult with your financial professional about your unique financial situation before acting on anything discussed in these videos. Freedomtax Accounting or its members cannot be held liable for any use or misuse of this content. Now, this year 2020 is going to be a very interesting year for taxes. Okay? Why? Most likely, when you file your taxes next year, or when you file your 2020 taxes in 2021, the things may look a little different. Why? There has been a lot of new programs that have been created to help small businesses, even self-employed individuals and the regular employee. We're talking about that this year, many people have received loans, forgiven loans, grants, unemployment benefits. So there's a lot of things that may look a lot different for you when you file your taxes next year compared to what you're used to when you file your taxes in the past. Okay? Now, once again, so with that in mind, a lot of people this year took out the PPP loan, and people are wondering, how will the PPP loan affect my taxes? Okay, now remember that the PPP program was basically a lifeline for businesses who are struggling due to COVID-19. It is a program that was intended to put cash flow into your business so you can use them to up to 24 weeks. Now, the attractive part of the PPP program is the fact that if you use it correctly, so if you use the PPP funds for payroll, mortgage interest, utilities, rent, and you use the majority of it for payroll, okay, the good thing about this loan is that it can be 100% forgivable, so you don't have to pay it back. So that's why a lot of people are going after these loans, even though right now the PPP program is closed since August 8th. There is a very high probability that a second PPP program is coming if it passes through Congress. So since this PPP program is a entirely new program, it had never been used before, there was a lot of questions surrounding how the IRS was going to view those funds. Okay? Now, if you meet the criteria for getting the loan forgiven, basically the question was, how will the government tax on free money that you're receiving? Because you're getting a loan, but it's going to be forgiven. So how was the IRS going to tax those funds? The answer is they will not tax it directly. So that's why it's a little bit more complicated than that, because according to the CARES Act, the PPP funds aren't taxable, and they really aren't, but there's more to it than that they do make it taxable, okay? So let me explain. Basically, in the CARES Act that was signed in March, the CARES Act says that the forgiven loan amount will not be included as taxable income, meaning that the intent of the CARES Act is that this income isn't taxable, okay? That means that you don't pay taxes on the money that you get from the PPP loan. Remember that the aim of this loan was to provide businesses with the money to keep running and continue paying their employees, and not to create a tax burden for businesses receiving these funds. So that's good to remember. The main purpose of these funds were to protect people's paychecks. That's why it's called the Paycheck Protection Program. Congress did not want this to become a tax burden in the future. So that's what the CARES Act says, and it is written in the law, okay? Now, there is a catch to this. A couple of weeks after the CARES Act was approved, the IRS came out with a notice. And this is what the notice actually says. And this is from the IRS. It says, this notice clarifies that no deduction is allowed under the Internal Revenue Code for an expense that is otherwise deductible if the payment of the expense results in forgiveness of a covered loan pursuant to Section 1106B of the Coronavirus Aid Relief Economic Security Act, which is the CARES Act, public law, all that mumbo jumbo, and the income associated with the forgiveness is excluded from gross income for purposes of the code pursuant to Section 106I of the CARES Act. In simple terms, it's saying if the forgiven loan isn't included as business taxable income, the expenses paid with those forgiven funds are not able to be included as a tax deduction, okay? Meaning that basically the funds you're getting from PPP, they will not count as income. So if they don't count as income, that is not taxable income. But the IRS is saying, but if it's forgiven, then the expenses that you pay with those PPP funds cannot be subtracted or deducted as an expense, okay? So this has a very big impact for your small business tax bill next year, because expenses that you were supposed to deduct from your gross revenue, now you cannot deduct them as an expense because you paid them with the PPP funds, okay? Now, basically, what does this look like on your tax return, okay? Well, normally, if a business has payroll, rent, mortgage interest, utility expenses, these are deductible from your taxable income. That deduction lowers your taxable income. Without that deduction, you will owe more taxes to the government. Basically, when you're paying payroll, rent, mortgage interest, utilities, those expenses lower your net profit. But now, since you cannot expense them out because you paid them with the PPP funds, your net profit is going to be higher, meaning that your taxable income will be higher. Okay, so that's what's going to happen in this situation. Basically, you lose out on some tax deductions, so you may have to pay more when the time comes for you to file your taxes. Okay, so basically, let's look at an example. The first example is, let's say your business is a C corporation. A C corporation is a business that files their corporate taxes on Form 1120. So let's say you're a C corporation and you got a $100,000 PPP loan. You use the entire 100,000 PPP funds on payroll. So according to the rules, you can get $100,000 100% forgiven. So the $100,000 won't be included in the taxable income, but you will not be able to deduct the $100,000 as an expense that you incurred. That means that you have an extra $21,000 tax liability at the end of the year. Why? Because those $100,000 that you were able to deduct in the past, since you paid payroll of the $100,000 with PPP, you cannot deduct $100,000 payroll expense. So your net profit now is $100,000 higher. So we take $100,000, we multiply by 21%, which is the corporate tax rate, and that's why you get $21,000 tax liability from the PPP. Okay? Well, while the PPP did provide you with $100,000, you're losing $21,000 tax deduction that you may normally get. Well, in this example, you're still going to have a net benefit of $79,000 from the program. That is money that you probably wouldn't have otherwise. So you still get a net benefit at the end, but this may be a surprise, a big tax surprise at the end of the year for small businesses, that they may get a bigger tax bill than they were expecting to get. So this is important if you're a C corporation to start doing some tax planning around this, okay? Now let's say that you're self-employed. It's more or less the same thing. All the PPP funds that you get as self-employed, to get it forgiven, will count as wages to the owner. So since you cannot deduct it, then your net profit, which is line 31 of your Schedule C, will be higher, thus paying more taxes. Okay? So if you're self-employed and you got a $10,000 PPP loan, you cannot deduct, even if you pay yourself, you cannot deduct it as an expense. So your net profit will be $10,000 higher. Thus, you need to pay taxes on the net profit in your Schedule C. Okay? So now, even though this is true, PPP does give a net benefit at the end of the year in regards to taxes, but once again, it can result in a tax bill that you are not expecting. That's why you should start consulting with your CPA to do some kind of tax planning. Now, it's very hard to do tax planning now. Why? Because things could change. As we speak, Congress and even the American Institute of Certified Public Accountants, the AICPA, is challenging the IRS's decision, saying that it goes against Congress's intent when they created the PPP. So there is a chance things could change in the future, but for now, it is a good idea to assume that you won't be able to deduct these expenses and you may have a higher tax bill as a result. It is our own opinion here in Freedom Tax that Congress and the AICPA, they're putting so much pressure on the IRS that yes, the IRS, we feel, is going to change this, but according to how it stands today, you just have to be ready in case you get a bigger tax bill than you're expecting. So basically, that's for all if you get your total PPP funds forgiven. But there may be cases where you have a PPP loan where you may not get all of it forgiven, okay? So if you, let's say that you get a $10,000 PPP and for some reason only $5,000 is forgiven, so the other $5,000 will become a loan with your bank, either a 2-year loan or a 5-year loan, depending on when you got the funds, and it's a 5 to 2-year loan with 1% interest rate, okay? So the loan balance that now you have to pay back, that loan balance is not taxable. You will not have to pay taxes on that because it is a loan. Now, the interest that you pay on this loan can be deducted as a business expense. Only the interest part that you make payments on. But whatever payment you make to the principal is not deducted as an expense because basically you're paying back a loan. So I hope you get this part as well. So thank you. We hope this video has been of value to you and it has at least shed more light on how PPP will affect or may affect your taxes next year. We really hope Congress and the AICPA does succeed in making the IRS change their rules so the businesses can deduct the expenses paid with the PPP loan, so there's no tax surprises next year. So once again, thank you for watching this video. If you think you have received value and you think more business owners can get good information out of this video, like it. That makes YouTube show it to more people. And also remember to subscribe to our channel. That way you get the latest information and the correct information regarding all these SBA loans. Remember that we are praying for you. We are praying for your family. We're praying for your business. Stay safe. If you want to contact us, this is our contact information. We are working remotely, so we can help you in any tax or accounting need you may have. Even though we are in Florida, we can help you if you're a person or a business in any of the 50 US states. We have lowered our consultation rate, so we are able to help more business owners. We want to thank everyone who is commenting on our videos. We are doing our best to answer all the questions that you make in our videos. If you do not know us, we are part of Freedom Group. We are a group of 4 companies. We have the tax accounting firm, we have an immigration law firm, we have an insurance and financial planning business, and we also have a real estate company. So we can help you in many, many ways. Once again, this is our contact information. Like this video, subscribe to our channel, and stay safe, everyone. God bless you. Bye.